Still on sale. That's some bad news. Analysts really don't like this company. We're going to go look at some economic data real quick. So, economic statistics, you can see a bunch of helpful fact. I don't really look at this super often, but I feel like it's pretty important to look at the GDP mainly, because that's just the gross domestic product of the country. You got the interest rates. This is some good news for us, especially because we're going 50-50. So we're going to have 50% cash, 50% stocks. So that's pretty helpful. So we got a nice little prime. Yeah, it's not. These are quite important when you're actually doing it on Wall Street Raider. This game is not super duper helpful. So I'm just going to start eating up. I'm actually going to start eating up some good old long-term debt. I'm going to start buying some government bonds, maybe some corporate. Once we hit, it's already 2021, my mistake, but yeah, we're going to do pretty well, I feel like. So we're going to start eating up some, hopefully the prime rate starts increasing. Yeah, I want to read the news real quick. There's a stock chart of FLA. Not the greatest idea of me to buy that company. I don't know why they're crashing. There shouldn't be. They're in utilities. But in this game, that's what I typically do, is they want you to get in and out of stocks really, really quickly. That's how I hit the $100 million mark, is I literally just bought a stock, waited to go up like 50%, sold, went into a new industry. Like, if you really, really want to go aggressive, you can put margin on the table, and you can start eating up some. Where the heck is Biotech? Right here. This is a very, very high growth industry in this game, and like they're actually. And the industry isn't super great. The only one I would really like is CISO, because they have an A. C, I would not do at all, because they're near their bankruptcy, basically. They could come back and you can make a great capital gain, but if you look at this, the price to net worth, I like it to be around 100 to 200 at most. If it's around 300 to 400 to 700 to 7,000, that's a bit insane. So it's just like, you're paying a lot more for a company. It's basically, there's a lot of hype around the earnings, like especially when it comes to XOMA. And they're in C grade because of their bank loans and stuff. They just don't have as much equity. They have a lot of liabilities. Price to net worth, $2. That's how much the company should be worth. That's what their assets and everything, so that's pretty helpful. But yeah, this company is a bit overvalued. I'm not going to go into biotech. So, yeah, we lost quite a bit of money on that stock, sadly. But we have some cash, so I'm going to put $4,000 into the stock and dollar cost average. Basically, lower my average cost per share. So we're going to buy 4,000. Oh, no, not that one. My bad. Let's look at my own company. Okay, we're going to pick up $4,200. Divided by the ask of 9.02. I could diversify this game. That's probably one of the best strategies you can do, is just diversify. That's why I had the $100 million portfolio. I diversified all across. Where is it? I did all across these industries, especially in these few. Yeah, I basically just reinvested the dividends back into more stuff, and I did some bonds while I was at it. But when you're like early on in the game, I would recommend probably going for stocks and just going for growth. Who knows? Let's just do a quick portfolio review. They're losing a bit of money. Well, they're not losing, but like they've lost one of their highs. Where is their competency? Very incompetent. That is some bad news. Yes, so yeah, I'm just going to let time play out and see how well they do over the long term. I'm probably going to play for one, like this year, and then I'll be done, I guess. So yeah, so it's almost the end of the year, almost the end of my first episode of YouTube. Yeah, so I'm pretty spanking new to when it comes to this stuff. Like, I'm very, very new when it comes to this. We're almost at the 50-50 mark. I like to play on the high ticker speed. Like, you can set your specific ticker speed. 50 is very slow. Like, yeah, and you can also, like, the ticker speed, like, a 1 is, like, super duper slow. It's kind of like realistic speed where you gotta have some patience. Uh-oh, here's some good news for us, boys. I did not mean to say uh-oh. But some good news is they're tightening. And the prime rate is where I typically start buying some bonds. It's at a moderate level when it comes to WSR. I don't know what it is, so let's just see what they think. U.S. Gas and Electric is pretty decent with shrinking capacity to boost profits. Let's see what they say. Predict oil prices will rise due to tightened supply conditions. I'm looking for specifically where they talk about interest rates. High interest rates and low tax rates. So I'm probably going to start eating up some. So I might eat up like 15 grand worth of government debt right now. I might do 30 would probably be better. And we can just reinvest our interest and stuff in that. So 30K. So I'm gonna start. I'm gonna buy like 30 of the. Let's buy 29. Yeah, 30. Not 300. My mistake. 30 of these. Could have picked up a little bit more, but we're picking up some long debt. I like to have a little bit of a comfort zone when it comes to this. It's cash and equivalents, so that technically does count as cash. But yeah, I like to have some money left over just in case if the rates do rise, and I like to buy some just in case if rates drop. Then I'm halfway is good, halfway is bad, basically. I don't know what I'm talking about. But yeah, let's speed it up. It's almost the end of the year, sadly. But I feel like our portfolio is doing decent. Let's put it on a good old 25, a quarter. Decent speed. That way you guys can catch along. Ooh, they're booming, boys. 32 cents a share. That's really good. Unless they did a reverse split where they basically have less shares. They might have. I'm unsure how many shares outstanding there were before this. But yeah, they're doing decent. I feel like I could do pretty well when it comes to this stuff. Yeah, stop looking. Okay, hopefully I'm gonna probably do 50. 50's 25 is way too slow. Raises their annual dividend. Awesome. I get an extra, I don't know, 220 something minus that. Oh no, 340 minus 220, my mistake. So I basically get an extra $100. That's not bad. We can reuse that towards buying more shares and eating up more stuff. And it's December 30th. This takes a little bit of extra time to go through. Now we're in the next year, so I'm pretty happy with that. It's gonna take a bit of time to hit January. And that concludes the episode for today. Don't forget to like and subscribe if you like what I post. Oh, and that did fall. That's good. And bad. I'll talk to you guys later. Have a good one. Peace out.